Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 28th of March 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. Several things to bring to your attention. First of all, a lack of movement, or a lack of significant movement at any rate, in the British pound against the US dollar in the cable rate, and you could be forgiven for thinking that things were fine and dandy as far as Brexit's concerned. The pound is still up on the week against the US dollar, and we'll look at the latest events in Brexit a little later on in the video. Elsewhere, something of a gain for the Australian and New Zealand dollars. The Aussie gaining 0.25% and the Kiwi clawing back 0.41% against their US rivals. So a bit of a bounce on the Antipodean exchanges. Elsewhere, the Brazilian real slumping against the US dollar. You can't tell that it's moved as far as it has from this daily change. However, if we take a look at the weekly losses, we can see that the Brazilian real is down by 5.74% against the US dollar, and we'll look at the reasons behind that fall momentarily. Dollar index for its part giving some ground, down by 0.17% over the last 24 hours, but the dollar was on the front foot against another commodity currency, taking 0.23% off of the rand and bringing its weekly gains against the South African currency to almost 3%. Okay, what's on the calendar? Events that may move the markets today. We've got a pretty busy calendar. It stretches across the whole of the business day. So we kick off at 10 a.m. GMT with business climate data out of the Eurozone for the month of March. And then at 11:15 we jump over the Atlantic for the first of the day's central banker speeches, this one from Fed member Quarles. At 12:30 GMT, staying in the States for initial and continuing jobless claims, and also a final reading on GDP for the fourth quarter out of the States, chance to see how the US economy really fared in the latter stages of 2018. And we'll also have accompanying the GDP data, personal consumption and core personal consumption data for Q4 as well. At 1300 we're back in Europe for the harmonised index of consumer prices data out of Germany for the month of March. This of course the ECB's preferred method of inflation across the Eurozone. And then at 1330 we're back in the States for our second central banker speech, this from Fed member Clarida. At 1400 it's pending home sales data out of the States even for the month of February. And then we're back into Europe at 1700 for a speech from the SNB member Meischler. Another central banker speech, this time back in the States at 1715, and it's Fed member Williams' turn to share their thoughts with us. And then we pause again until 21:45, crossing over the Pacific to New Zealand for building permits data for the month of February. We stay in Asia Pacific for the rest of the day's data. At 23:30 we'll have the Tokyo CPI and Consumer Price Index data for the month of March, a good proxy for what's happening to inflation across the rest of the country there. We'll also have the release of unemployment data out of Japan for the month of February. And then at 23:50 we'll see industrial production data out of Japan, a preliminary read for the month of Feb, alongside large retailers and retail trade sales for the month of February. Okay then, breaking news and comment that's caught my eye overnight. First of all then, UK MPs have failed to find a consensus after indicative votes yesterday on 8 alternative Brexit scenarios. Meanwhile, Prime Minister Theresa May has said that she will stand down if MPs back her existing withdrawal agreement. So no further forward necessarily, but perhaps an alternative route map now on the table as far as that withdrawal agreement is concerned. Meanwhile, the Brazilian real fell sharply versus the US dollar as lawmakers in Brazil get a bigger say in the composition of Brazil's annual budget. That perhaps could hamper some of the economic reforms that President Bolsonaro was elected on, or at least the promises of economic reform that he was elected on, and that scared the market somewhat there. Meanwhile, China's PM Li Keqiang has said the country would open up its markets to foreign investors, making it easier for banks and insurance companies to operate in China. And he also pledged further support and lower interest rates to stimulate the local economy, but did not go into any specific details about how that would be achieved. Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? We have often discussed income inequality and the gap between a higher corporate profit share, productivity growth and wage rises for workers. But a new study reveals that it's not just an issue between US workers and employers, but also between cohorts of workers based on their pay, and that the highest earners are leaving the other demographics behind. The chart here on the right hand side from the Economic Policy Institute shows the ever widening gap between the highest workers, the top 1% of paid workers, and how their wages have risen compared to other cohorts here, and even the next highest group of workers. You can see that their wage rises are significantly lower than those that have been enjoyed by the top group, and obviously it gets progressively lower the farther down the pay spectrum you go. So food for thought there. Not good ideally for labour mobility or social mobility, and it's something for us to all think about and how we can perhaps get around that by doing something else for ourselves. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, please do take the time to read this risk warning thoroughly. Thank you for your time today.